Hi again everyone, I hope you are doing really well. Today I'm going to do an update on a company that I've covered indirectly through Workhorse Group updates, that being Lordstown Motors, ticker symbol RIDE or RIDE. Without going too much into detail about past problems for this budding EV pickup truck business, as this is quite well documented, I think we can fairly summarise this by saying that Lordstown has really struggled to maintain investor trust in the year 2021. But in recent months, despite negative impacts on the stock price, the company has seemingly been slowly getting their acts back together in trying to continue to rebuild trust in what it is they are trying to accomplish. And I think yesterday's announcement of a new CEO in the form of Daniel Ninivaggi is another step in that direction. So what I want to do in this video is have a little bit of a look at what has been going on with the stock through a technical analysis, take a look at the huge short interest in the stock and what this all may mean, and discuss the potential of a short squeeze, as well as look at this most recent appointment from the company. But before I do that, I want to quickly remind new viewers here that I am planning on setting up my channel as a social enterprise going forward, meaning that I want to use the money raised through YouTube advertising to support a range of good causes that I feel passionate about. I think it's a unique way to make a difference. Rather than people donating money, people are able to support these causes simply by watching videos like this one. So I want to encourage people to sign up to the channel and support this unique initiative. We are getting closer to that 1,000 sub mark, having recently crossed over the 600 mark. So thank you to everyone who has joined up so far. With that out of the way, let's get into this update on Lordstown Motors. So to start with, the appointment of new CEO Daniel Ninivaggi is following on from the company's resignation of former CEO and founder Steve Burns, who was behind much of the activities that have deteriorated investor confidence in the company. I believe the appointment of Daniel Ninivaggi brings a unique and potent combination of someone who really understands the auto industry and will be able to oversee and guide much of the development of Lordstown Motors in that regard, but who also has the added expertise and experience of understanding capital markets through his experience as one of Carl Icahn's former right-hand men at Icahn Capital. Pleasingly, Mr. Ninivaggi announced that there were no plans to delay any of the company's current production goals and made clear that this was his primary focus now that he had taken the reins of the company. So all in all, an early but pleasing sign for Lordstown Motors. On the back of this news, the stock responded very positively, rising as much as 41.4% early in yesterday's trade to $7.79 as an intraday high, before stabilising around the $6.50 mark for the remainder of the session. The stock closed the session at $6.49 per share, which represented an increase of 17.79% for the day. Switching to a Google chart, we can see the positivity for the stock continued in the aftermarket, with the stock climbing further to finish the low volume session at $6.64 per share. Now switching to a longer term daily chart, it's easy to see why yesterday's news was very much welcome to long-suffering holders of the stock. Like many EV companies that had formed in recent months, Lordstown Motors has been on a rollercoaster ride throughout their recent history. The stock has ranged from a low of $4.77 per share just last week to being as high as $31.80 back in mid-February. The decline has come on the back of falling interest in the EV sector, following a frenzy of interest on the back of Tesla's growth and green initiatives being announced by the new Biden administration. However, in the case of RIDE, they have been plagued with a number of internal issues of their own, including issues around funding, the resignation of their CEO and CFO for arguably misleading conduct, which has resulted in official probes and investigations from regulatory bodies into the company. Some of these issues have sorted themselves out, particularly now that there is a new CEO, and also recently an equity funding facility via hedge fund YA2 has also helped to settle their issues around funding. On that note, it is worth noting that this funding facility, because it is an equity funding model, will likely have a diluting effect for existing shareholders every time it is utilised by Lordstown Motors. So something to keep in mind. Now, looking at some data from interim balance sheets, Lordstown Motors has a tangible book value of $3.33 per share since their most recent June quarter results. This is an interesting value proposition in the sense that the current stock price is just under double the tangible book value at $6.49 per share, and I will show you why I think there is a bit of a value proposition here. So while these various EV companies that are on screen are at various stages of production in their lives, there is an interesting value proposition for Lordstown Motors or RIDE. I've only analysed a few other well-known EV companies on the market, but the net assets on Lordstown Motors books, aka tangible book value, is only worth 195% of the current share value. To put this in perspective, Workhorse, which is at an early point of production and also a major, though recently slightly reduced, stockholder in Lordstown, has a stock price a little over 5 times the tangible book value of their stock. NIO, a company that is already starting to deliver scale of sales in China, has a better value proposition than RIDE at the moment from the point of tangible book value in relation to share price. But for this company, it is worth being mindful of the ongoing loss of confidence in many of the Chinese US listed stocks, such as NIO. And finally, the granddaddy of them all, Tesla Motors, their stock is valued a whopping 28 times more than their current tangible book value. Not that I would expect Lordstown Motors to achieve that level of success anytime soon. However, if they are able to steer the course and successfully come to the commercial market, I wouldn't be surprised if they can really jump in valuation. Based on the Workhorse and Nikola stock valuations, Lordstown rising back above the $20 mark is not inconceivable if all things go well for the company. Probably this is a good time to remind viewers that this is not investing advice, but I am just reflecting on some of the numbers here. You need to make your own minds up about this. Based on recent short data, Lordstown Motors, like many of these other EV stocks, is a heavily shorted company. In fact, with 31% of the outstanding float currently shorted, this makes Lordstown Motors the 14th most shorted stock on the market at the moment. And while yesterday's rally would have put a number of the historic short positions under stress, with a borrow rate of only 1.48% at the moment, that is not going to put any of them under too much pressure. So while some might think a short squeeze could occur, I would not be thinking about that too much at the moment unless there were to be a continued and sustained rise in the stock price in coming sessions. Though with the likely market hesitancy that may come from the fallout of the Jackson Hole Symposium on Friday, this continued rise is definitely not a sure thing for the company at this point in time, at least for Friday's trade. So some final thoughts just to finish off. I do think that Lordstown Motors, at least on paper, looks to have got their CEO appointment right. I think his broad knowledge of the auto industry and strong knowledge of capital markets is a coup for the company. I also believe that at the current stock valuations, there is a bit of a bargain to be had, if you believe in the company long term, that is. Personally, I won't be buying in at this stage, as I already have a decent position in Workhorse and hold a relatively big position in Tesla. Also, through Workhorse, while they have sold down part of their position in the company, they still hold about 5% of the total outstanding float in Lordstown Motors. So I kind of still have an interest in RIDE indirectly, though I suspect the Workhorse position will dilute as Lordstown draws on their hedge fund equity raising scheme courtesy of YA2. I do believe that if the company can continue to get their act together, they have a longer term wide scale market appeal, at least more so than Workhorse, as their product has both commercial and private appeal, whereas Workhorse's electric delivery vans with their drone technology are largely reliant on the slimmer commercial market. Who knows? I may buy in if I'm able to free up a decent amount of cash sometime soon in my portfolio, but at the moment I'm just going to be sitting back and watching. And like I said before, this is not investing advice. Anyway, what do you guys think about Lordstown Motors? Do you think the company should be avoided, or do you believe they now have what it takes to get back on track with their early production and testing and eventual coming to market? Let me know in the comments below. If you'd like to see more stock related updates, I'll encourage you to subscribe to the channel. Like I said at the start, by doing so you are helping to support the social enterprise initiative I'm hoping to turn this channel into in the near future, where just by watching videos people are helping to make a difference to some good causes at no financial cost. So I encourage you to sign up and be a part of all that. It's a good opportunity to harness the power of YouTube for social good. Anyway, until next time guys, may the markets trade in your favour. Cheers.